Hey everyone, welcome in to another daily editorial here on the KE Report. We're getting an update from West Red Lake Gold Mines, focusing on some recent high-grade drill results that the company released at the Madsen mine in the South Austin zone, and also going to be discussing the financing that the company announced back at the tail end of February, as well as some development work that's ongoing at this asset. West Red Lake Gold is traded on the TSX Venture Exchange under the symbol WRLG and on the OTCQB under the symbol WRLGF. We are chatting with the president and CEO, Shane Williams. Now, Shane, let's get right into the drill results from this South Austin zone. This is a high grade zone within the overall resource at this Madsen mine. As I mentioned, high grade drill results, headline numbers of 25 grams per ton gold, almost 40 grams per ton gold, and 18.6 grams per ton gold. Explain to us a little bit further what these results are telling you about that South Austin zone, please.
Yeah, great to be on. And yeah, really, look, the previous operators, as you probably know, really only focused on the McVeigh zone. They really only got a chance. They went into that McVeigh zone, which was much lower grade. And so our strategy has always been, when we are planning a restart, to really target these Austin and South Austin zones. These are much higher grade zones and much more continuous. And, as we put out these results, really, we're seeing that. And the team have kind of honed in on these results. And importantly for me, we're seeing high grade, but more importantly, we're seeing over good mineable widths. So, some people put out results that are very skinny and lots of high grade, but we're seeing results that are both high grade and very wide, which means from a restart planning perspective and a mineability plan, it kind of ties into the thesis that we're pushing, that these Austin zones, this high grade zone, is a lot better area to start. And with definition, we'll be able to bulk out a restart plan very easily. We've got some fantastic high grade results over good mineable width. So we're very pleased on this. This is a South Austin. Remember, this is more of a definition program, so which is already has a resource. But importantly is, again, these results are actually higher than what's in the model. So it brings forward that theory that, with more drilling, this resource will grow over time. And that's kind of exciting as well, that we can see the results we're getting. They will bulk out our existing resource and potentially increase our existing resources that are already in these areas.
Well, Shane, I think that's such a great point, that not only are these good mineable widths for future development, but they're higher grade than some of the resources you already knew about there. And we had the VP of Exploration on, Will Robinson, just last month, and we were talking a little bit about these Austin zones, the North Austin, the Austin, and the South Austin, and how it all ties together into what will probably be a lot better development scenario as you move that direction. Maybe speak to a little bit of the drilling you guys are also doing underground now, and how it's a lot easier from an underground vantage point to save money while you're drilling, but also get to some of these targets in a better way than the prior operators that were trying to do it from surface.
Yeah, look, surface drilling, these systems in Red Lake are they go very deep. They're high grade, but they go very deep. And they are narrow vein, systems that are continuous in elements. So the only way to drill these systems is from underground. And look, the prior operator went into an area called McVeigh. It's close to surface. So look, it was easy to drill from surface. But these lower areas are very difficult to drill from surface, because you have the cost associated with that, but also you have the positioning of the drill and the ability of the drill to hit these zones. As you go down deeper, you also get deflection in the drilling. Sometimes it's hard to hit these targets. So the only way to drill these systems is get your development done underground, build your drill stations, and really you can target fan-like drilling across the area. And that's the only way to hit these systems and build resources. And that's given us a huge advantage. We have 2 development crews working underground now on shift, building those inventory of drill stations, which allow us to target areas that were inferred in previous resource models and also new growth areas. I would say we're doing a dual track approach. 70% of our drilling is focused on definition, building that inventory of mineable, like those results I just said there. But 30% are also focused on growth areas. And as Will alluded to on your previous call, this North Austin area is an area which is new mining area. It's a brand new area. It was known by previous operators. They just never got the time to expand it. And we see a lot of potential to grow within that area. So it's kind of a dual track approach, the definition and this new growth area. So yeah, it's very exciting as we go forward.
So circling back to the news release and the importance of the South Austin zone for the mine restart here. Figure 3 shows the overall South Austin zone, how it relates to all these other zones, or the South Austin zone, how it relates to all the other zones. It's a fairly large zone here. And since it's going to be so important for the restart, what are we talking about in terms of current size of that South Austin zone and how much you think you can upgrade, potentially even the grade or even the size of it?
Yeah, the focus of the area will be on the South Austin zone and the North Austin zone. Most of those areas are the key for building that inventory of ounces as we build out that. So look, the South Austin zone is quite a large area. It's around 480,000 ounces, grading at 8.7 grams, that South Austin zone. So you can see it's a fairly robust and higher grade. The previous operator had around 3 or 4 grams sort of material as they run a mill. So that's really why we've targeted that. I would expect us the ability to grow that as well. As you can see from those results, they're much higher grade than the resource model that's there at the moment, which is grading around 8.7 grams and about 500,000, just under 500,000 of indicated mineral resources, which I do expect to grow, which gives you, with definition drilling, that gives you a good meaty chunk of area to start your production. Remember, so people are aware, this will operate at around we have to do a feasibility study to understand, but around the previous operator had a study which had around 80 to 90,000 ounces a year. So that sort of 400 to 500,000 ounces of inventory gives you a very good runway to start the project, really.
Well, let's dig into that just a little bit further, Shane, just because there's a lot of people that have been watching this project for a while and excited to see your team really looking at it with a fresh set of eyes, doing some additional drilling to, like, as you say, not just do more definition, but also grow the size of the deposit. But your team is also doing a lot of development work. You mentioned there's a lot of folks on the ground and underground right now on site doing some development work. What other things are they doing to progress and de-risk this project, Shane?
Yeah, great question, because you're right. We have talked a lot about the de-risking and about the results and everything, but I was just up at site last week. I spent most of the week up at site last week, and it's amazing to see the energy and buzz that's back there. Obviously, the previous operators the project went into the CCAA process, and a lot of the team were very despondent and distressed, but we really began to re-motivate the team and get them going. Like, we have one drill underground now working. We're adding a second drill now underground. We have 4 shifts around the clock on development. So development crews working on the ground, equipment going. So we have like up to nearly 100 people on site at the moment. So it's kind of like a small operation, as you would say, at this stage. And all those people are focused on this definition drilling, building the drill inventory, getting development in place, and really setting up the mine for a restart. Some areas we have that inventory already built and we're setting up development in preparation for a restart. And so, yeah, lots of excitement on the site, not just the drill results, that give us a lot of confidence as we go forward.
So Shane, can you reiterate the timeline then for all this underground development leading to a mine restart?
Yeah, so our plan at the moment is to, actually, before I do that, look, we're just also about to kick off a pre-feasibility study. So, the previous operator there was a feasibility in place, but, given this upgrading of the resource and the great results we're having, we're actually going to step back a little bit with this conservative approach and redo a pre-feasibility study and incorporate, remember, the last feasibility was done back in just at 2020, and there's been a whole lot of drilling done since then, and all that needs to be incorporated into the new model, also areas of mine planning. So all that needs to be done. We're hoping to have that done by the back end of this year. And then, use that as a basis to look at a restart. So we need to finalize that, but it's 2026 at this stage. We haven't really locked down what we need the feasibility stuff, but that sort of timeline, I would say, would be a potential restart of this project.
Are you going to be updating the resources as well? Because to your point, you've done so much drilling. I would imagine a lot of things have jumped categories, and then you've also found some new areas. So will that pre-feasibility also be accompanied by a resource estimate upgrade at one point?
Well, actually, it will be, but our focus is more to actually put reserves with a pre-feasibility study. We'll actually put reserves on. So we'll increase the confidence level within that ore body by actually putting reserves on the book. And there will be update to resources as categories change, as you said. But a lot of it will move into indicated, and that would mine planning will be converted to reserves. And so that's really the first time the project's had real reserves on it, and that will be used as a basis for. And that's quite exciting that people can see that level of confidence the work is being done, and they get that level of confidence that reserves are on the book for the company as a base for restart.
Let's talk finances then, Shane, because look, you have a lot of people on site, you're working on development, you're aggressively drilling. This all does cost money. And at the tail end of February and then beginning of March, we got news on a $20 million US private placement of gold-linked notes. This private placement has also been upsized to $23 million, but it's this gold-linked note that's a bit of a unique aspect of this financing. Can you take us through the detail of what these notes entail and what the company needs to do to satisfy these notes, please?
Yeah, again, as you are aware, and most of your listeners will be aware, the markets, the equity markets in particular, have been a bit depressed for gold miners and particularly developers for quite a while. And so when we looked at how we would get this financing in place, look, we wanted to consider dilution, obviously to the existing shareholders, and potentially for new shareholders coming in. And so we looked at a number of different options, another equity raise, like maybe during a private placement, et cetera, et cetera. And, this gold link note idea came up. And so we kind of put together a structure on this gold link note. And it's kind of structured based on a gold price. It's kind of like a debenture, but it's on a fixed gold price effectively. And, we picked a gold price of $1,800 gold. And as many of your listeners will know, gold is taking a bit of a run at the moment. And based on the floor price of $1,800 gold, it returns a 12% return. And so at today's price, it's nearly up at a 16-18% return. And then we've put warrants on top of that, which add another few percent. So it's really a really good piece of paper. A lot of people were interested in that. And as for satisfaction of that, once we go into production in, let's say it's 2026, then some of the gold that we produce is allocated to an account, and that's sold basically, and the investor gets the upside above the gold price upside to that debenture. So it's really a great piece of paper for people who believe in the upside of gold. But also for the company, it minimizes dilution as we go forward.
Yeah, Shane, it was nice to see a creative way to minimize dilution, but also I'm sure people looking at this are pretty excited that gold has popped even higher over the last couple of weeks. So that's definitely helping the cause. What does that give the company then as far as a treasury to be able to continue to do all these work programs that you have on tap?
Yeah, so that certainly builds the treasury. And as we've just done in the last quarter, we raised money, as you know, at the back end of last year. So we have probably $5 to $7 million in bank. So that will give us a good runway of, in Canadian dollars, 30 to 40 million Canadian dollars, which will allow us to well into the back end of this year to progress our plans as I laid out with the underground development, drilling, that de-risking phase as we move forward. So, that's important to keep the team motivated. And we have a lot of people focused on the success of the restart of the Madsen mine. I think another important point, we have had a lot of work done and a lot of discussions by our finance team. And actually a lot of our work that we're doing on site today is actually flow-through eligible. So that gives us another method to, again, minimize a little bit on dilution and use flow-through funds to actually advance the project. So, that's another way of getting the treasury, money in the treasury, but also minimizing dilution. It's A lot of it is CDE. A lot of your viewers would know CCE, which is more for exploration, but CDE is another way of getting flow through funds, but also minimize dilution. And it has a premium to current share price because of the taxes. So again, another innovative way of trying to finance the company as we move forward.
So Shane, just to recap then, in terms of news flow, with all the work that's going on, what should investors expect and what's the timeline for all of it then?
Yeah, I think over the next number of months, it's more of the same of these de-risking and these drill results. Look, there are some very exciting things coming up in probably the second half of the year. We are getting down into this 8 zone, and I don't know, maybe Will has talked about this 8 zone, and this 8 zone is a fantastic part of the ore body. It's down deep in the system. It's actually very similar to the high-grade zone at Red Lake, which obviously, as your listeners will know, completely transformed that mine. It's down at the same depth. There's currently 100,000 ounces that indicated at 25 grams that indicated inferred. And the previous operator drilled it only from surface, but they're very, very long holes from surface. We're now underground. It'll be the first time it's ever been drilled from underground. And, this has a lot of excitement in the company as we begin to get in and drill that. And I do expect some very high grade hits. We've seen the existing model. It was in the old days worked a little bit, so we know what sort of production and grades they were getting out of it. So as we drill that this year, there'll be a lot of excitement, I believe, around the company as we get in and drill that area. We're also going to kick off a pre-feasibility. And as we get towards the back end of the year, we're also planning a bulk sample program, which will also give that level of confidence. So yeah, a lot drill results for this quarter, but as we move forward into second and third quarters, we're going to get more into development stage and updates for the viewers.
All right, Shane, thank you very much for this update. We'll post a link to the West Red Lake Gold website so you can read over those drill results and also the details on that private placement. Please send us any questions you have for Shane and the team over at West Red Lake. We'll get those addressed for you. Shane, thank you again for your time. Please keep us up to date on future news.
Excellent. Thank you very much, guys.